What's up guys, I'm Paul and welcome to my channel. Now in this video we're going to be talking about profits, specifically how you can calculate the profits for your e-commerce business. Now if you've got any other type of business, online business, whatever it is, you can use some of the principles I'm going to cover in this video because basically accounting practices are the same no matter which business you use. There's just certain variables that you need to factor in. But as I say, primarily we're going to be looking at an e-commerce business and we're going to be looking at how you can figure out your profit per product, how you can use this to make projections for your business so you know where your break-even point is and also where you're going to be profitable, and also how you can do your end of month / end of year accounts to see how profitable your business is overall. Now I'm not going to be covering any kind of taxes in this video. This is because taxes are incredibly complicated and I only just about understand how they work here in the UK, so I'm not even going to attempt to do it anywhere else in the world. And this does lead nicely into my disclaimer for this video. I am not a qualified accountant or finance professional, and if you do need specific financial advice, I'd recommend going to a qualified accountant because they're going to be able to tell you exactly what you need to know when it comes to your business finances, because that's what they do professionally. But everything I'm going to cover in this video is what I've used in my e-commerce business and the accounting principles I also use for my YouTube channel and also my blog as well. And before I did actually get into the world of e-commerce, I was studying to be an accountant. So I do have a basic understanding of the accounting principles that do apply to businesses because I actually spent a good couple of years actually studying accountancy. So with the introduction out of the way, let's jump into the video so we can actually start talking about profit, because what entrepreneur and business owner doesn't like talking about profit? So the first thing we're going to talk about is your profit per product. And this is hugely important when it comes to e-commerce because this is your main source of income. It's your main source of revenue. And you want to know that you're making enough profit on each product you sell that you're going to be able to cover all of your business's expenses. And this is something I haven't really seen covered all that much on YouTube. And a lot of the people I see talking about this just talk about the gross profit. And this is the difference between what you buy a product for and what you sell it for. So for example, if I bought a product for $50 and I sold it to you for $100, I would make $50 gross profit. But unfortunately, I don't pocket that $50 if you buy that product from me online. This is because when we sell online, we do incur certain expenses, and this is what we need to factor in order to be able to figure out our net profit per product and say this is hugely important in being able to figure out whether or not your business is going to be profitable. So how do we figure this out and what are the expenses? Well, there's generally 3 expenses that you are going to incur when you're selling online. The first one is your payment processor fee, because you need somebody to process that payment when somebody buys something from you. And I'm going to use PayPal in this example because they're the largest payment gateway in the world. And they charge 2.9% plus a 30-cent transaction fee. And that's charged on the full $100. I'm going to stick with that $100 example. So for this, to PayPal, we're going to pay a total of $3.20 because it's $2.90 for their percentage and the 30 cents transaction fee, which equals $3.20. Now the second expense you're going to incur is your shipping costs, and this is what it costs to get the product from you to your customer. And there's 2 elements to your shipping. Number 1 is actually how much it costs to ship it. So when you go to your shipping provider, how much they charge you to take that product and take it to your customer. The second part of it is your packaging costs. How much does it cost to package up your product? So these are, or it could be your envelopes, your boxes, your safety packaging, whatever it is, whatever you have to buy in order to be able to package that product up to ship it out, you need to factor in because it's an expense for your business. And the third thing you can also throw in there if you want to is actually your time it takes to package the product up. Now, if it only takes 1 to 2 minutes to package your product up, you don't really have to worry about that. But if it takes 15, 20 minutes, half an hour to package that product up, you do really want to think about including this in your postage charges because it's your time and your time is valuable. Now, going back to the example that we're using in this video, we're going to say that it cost me a total of $5 to actually ship the product, and packaging costs cost me $1.80. So that comes to $6.80 for total shipping. And the final expense you're going to incur is the actual cost of getting that sale, because this is hugely important because there's very few sales that you get online that that are free. The only ways these come are if you basically get organic traffic from search engines, or you get organic traffic from your social media pages and people then click through and buy. But generally we're going to have to pay to generate that sale, and this depends on where you're selling. So if you're selling through your own website, this could come in the form of ads, so say Facebook ads or Google ads to get people to your site. But if you're selling on marketplaces such as Amazon, eBay or Etsy, it's the fee you actually pay to the platform that's your cost of sale. So for this example, we're going to say it costs $10 to generate that sale. So in total, we've got a total of $20 in expenses. So to figure out our net profit, what we need to do is we need to take our sales price. We need to minus the cost of the goods, so which is the $50. We then need to minus our expenses that are associated with that sale. And that brings it down that we have a net profit on that product of $30. And if you want to figure this out as a percentage, what you need to do is you need to divide your net profit figure by the sale price and then multiply that by 100, and this will give you a percentage. So in this example, it's really easy to figure out, and we made a nice 30% profit on this product. That's a pretty awesome profit margin for an e-commerce product. So that is how we can figure out our profit per product. And this is something you want to do with every single product you sell, because you want to know exactly how much profit you're making when you sell that product. And you also want to go through and make sure you're factoring all the relevant expenses in when you're selling that product as well. So your shipping expenses, any other associated expenses. So now that we've figured out our profit per product, we can use this to make projections for our business and see where we're going to break even and also where we're going to become profitable as well. And for this, what you need to do is you need to figure out your business's fixed monthly expenses. And this varies depending on the business, but things you want to factor in are things like your website costs, how much your premises cost, so if you rent an office or a warehouse, something like that. Also things like insurance, because you need insurance for your business, because just in case things go wrong. But any fixed monthly cost that you pay out for your business, you want to factor in. So say we've got fixed business expenses of $1,000 a month. And we just figured out that we have a 30% profit margin on our products. So in order to break even, we're going to need to sell at least $3,500 of products a month in order to cover our business expenses and break even. And actually at $3,500 a month, you'd actually make a $50 profit every month. But you can use that as a basic guide to how much in terms of sales you need to generate every single month in order to cover your business's expenses. This is a great way of doing projections and understand where your business needs to be going forward, what you need to aim for in terms of sales. It's a very useful thing to do projections and kind of give yourself a plan working into the year ahead where I need to be in terms of sales. So the final thing we're going to talk about in this video is your end of month or end of year accounts. Now personally for me, I always like to do end of month accounts because I like to know where my business was every single month. I think this was something I picked up when I was actually studying to be an accountant, which you want to know where your business is at any given time. So being able to do end of month accounts is really useful. And the principle for end of month accounts is very simple to that of figuring out your profit per product, because you're basically taking your revenue, which is your sales, minusing your cost of goods sold, then minusing all your business expenses to figure out your net profit. But I am going to break that down into a little bit more detail for this video. So the first thing is your total sales, and this is the amount of sales you generated over that period, whether it's a month or a year. This is your total sales figure. And the next thing is to figure out your cost of goods sold, and the basic principle for this is very simple. So you just want to add up all of your receipts for the stock that you've brought, then minus your remaining stock from this. To figure that out, just do a quick stock take, see what you have left in stock, then take that figure and minus it from the receipt from the stock you've brought, and that will give you your cost of goods sold. Future Paul here. I was just editing this video and I realized that there was something I did miss out when I was covering the cost of goods sold. Now what I've just explained is the way you figure out cost of goods sold when you're just getting started. If you've never figured out your cost of goods before, add up all your receipts minus your existing stock, and that will give you your cost of goods sold. If you're doing this on a recurring period, so you're doing this on a monthly basis, what you want to do is you want to add your receipts for purchases in that period to the stock quantity you had at the end of your last accounting period, so last month or last year. Add this in, so you add your previous stock, add your new purchases, then minus your existing stock from that, and that will give you your cost of goods sold for that period. So I just wanted to add that bit because I didn't quite cover it properly. Hope that makes sense. I'll probably put something on the screen to try and explain it. So that's me out. Back to the video. So you minus your cost of goods sold from your sales, and that gives you your gross profit for the time period that you're doing these accounts for. Great. Now we need to figure out what our expenses are so we can figure out our net profit. And these are basically broken down into two categories. The first is variable expenses. These are expenses that fluctuate over time. They're not a set fee every month. And then you've got fixed expenses, which are basically the opposite of variable. They're a fixed price every month or every year, so you know exactly how much these are going to cost you. Examples of variable expenses are things like payment gateway fees, shipping, marketing. Utilities can also be a variable expense as well, depending on how much energy or whatever you're using in your business. So these are variable expenses. Say these are things that fluctuate over time. Then you've got fixed expenses. So this could be things like your website, because you know how much that's going to cost you every single month. Your rent, you know exactly how much your premises, whether it's your office or warehouse, is going to cost every month. And finally, a common fixed one is also your insurance as well, because this is just something you pay an annual premium for. Now, obviously, there are lots more expenses that your business can incur. This was just a quick example. So let's do a quick example of end of year reports. Let's say we had sales of $100,000. The cost of goods was $50,000, which gives us a gross profit margin of $50,000 for the year. Then we need to factor in our expenses. And let's say our variable expenses were $15,000 and our fixed expenses were $10,000. This gives us a total expenses for the year of $25,000. Minus that from our gross profit, and that gives us a total net profit of $25,000 for the year. And if you want to figure this out as a percentage, just divide this by the sales figure and then multiply by 100, which in this case will give us a net profit margin of 25%. Now that's actually pretty good for an e-commerce business, but this was a very basic example for this video. So I hope this video has helped you learn some of the accounting practices you can apply to your e-commerce business to help you understand how profitable you are, and also do projections for how profitable you think you might be in the future. Because as business owners, we need to understand the numbers. It's hugely important, because if you don't understand the numbers, you're not going to understand whether or not your business is profitable. Now, as I said, if you do need detailed financial advice, it's always best to go to a qualified accountant, because they do this day in, day out. They're going to be able to give you advice, especially when it comes to things like taxation, because that can be hugely confusing for individuals, especially because some governments just like to make it super complicated. So whenever you are dealing with tax and things like that, always go and see an accountant just to ask questions, and they'll be able to give you the best advice. But hopefully this video has given you some kind of basic understanding of the principles you can use at home for your e-commerce business to understand exactly how profitable you are. So I hope you found this video helpful, guys. If you have, I'd really appreciate it if you could drop a like on the video. Also, if you'd like to support the channel, you can do by buying me a coffee using the link in the description below. So thank you so much for watching, guys. I really do appreciate it. Stay awesome, and I'll see you in the next one.